the managing director of IDFC FIRST Bank, has joined us. Mr. Vaidyanathan, many congratulations. I believe you've got two big marquee investors picking up stakes in IDFC. Can you just first take us through the numbers? What does it mean in terms of capital coming in? What does it take your capital adequacy to?
First of all, thank you very much, Lata. Yes, it's a really big deal and a very important day for the bank because we get 7,500 crores of equity capital. And it's coming in the name of Platinum Invicta, current C, which is an affiliate of Warburg Pincus. They're getting 4,900 crores approximately. And Platinum Invictus, which is a subsidiary of RDR Private Equity Division. But RDR is a really big name, the private equity division. So both are iconic.
No, both are big names.
Big name, like iconic. And we have worked with Warburg Pincus for like 12 years now. They're really like wonderful people. I'm really
actually that was going to be my question to you. I remember it was in March 2024 that they sold off their stake at a very high gain. But what made them come back in just 1 year and 1 week? They've come back to you. What was they thinking? Did they tell you?
Honest answer is I taste them.
Okay.
I taste them because I think the bank needed capital. So I messaged them. I reached them directly. I told them, please, I'll be really happy if you came in. And of course, then we pitched the story. We told them how the bank is set for a phase 2 of growth, how we can create really phenomenal value in the next maybe 5, 6, 7 years. And they are long-term investors. They can see that they made a lot of money last time. Okay. So they felt excited to come again.
Yeah, it looks like they made some 8 or 9x, if I remember right, in terms of where they came and when they exited. But Mr. Vaidyanathan, you see, you needed the capital you don't really need. At the moment, you have a surfeit of capital with this 7,500 coming in, right? What is your capital adequacy now and what was it before?
It's 16.4 or 5 right now, and it will go to 18 point, close to like 19% after this raise. The thing is, Lata, that as the CEO, I have 2 very big responsibilities: to run a super safe bank. Super safe bank is how diversified deposits are, etc., and how quality of loan book is good. All that is super safe. But capital is a very important part. I take that as a responsibility. And even though we were 16 plus, I have to be honest, I wanted to raise more capital. And capital positions us for growth because you see, one of the key things is profitability. Yeah. So the next phase of growth will give us operating leverage, will give us profitability. So I'm really keen about that.
Okay, but it would also mean immediately dilutive of several ratios, right? I mean, at the moment, the stock is showing a red tick probably because of that. Of course, the market itself is in the red, and your share, I think, ran up a decent amount in the last 1 month, what, 15% or something. You saw a good gain, so maybe a bit of sell-on news is also coming in. But it will be dilutive immediately when you have, 18-19% capital adequacy.
Yes, this will have a dilution of 15%. But really, Lata, I want to just share one thing to you and to all investors who are hearing this program, that the main thing is that the bank has a phenomenal model. Otherwise, our operating profit could not have grown from 750 crores to 6,000 crores in 6 years. It's not possible. So we have a really good model. But my one big learning of life, one day I saw an interview of Jeff Bezos, about Amazon. He talked about, he said, I have a wonderful product, wonderful molecule, but without capital, there will be no Amazon. It's like that. Today, we have a phenomenal product. People are not seeing the full power of it yet because of, liabilities, laws, and credit card laws, etc. It's aside. Bank is very powerful, economics. But capital. If you have capital, this can grow for a long time. I really believe that the next phase of growth is transformative for the bank. Bank will be very profitable in the future, and I think you will watch it happen.
Okay. No, I mean, if capital was important for Amazon, it is much more so for a bank. I take your point on that. But how much can you share now? I know you're in a pre-result silent period otherwise, but can you share what do you want to use this money for? Is it earmarked for branch openings? What is it for?
It's the growth. There are 2 things actually. I'll keep it very simple for you. If you see the loan book of the growth of the bank, there's a retail component of it, retail, MSME, agri, SME kind of stuff. That was 100 crores in 2010. Today it is 2 lakh crores. So it should give you no surprise to guess what this will be, let me say, 5 years from now. It should go one way up. I'm very clear about that. So that growth, let me call it like at least 20% CAGR for 4 or 5 years. At least that much I can see. So for that is one thing to look forward to in the longer sense. And number 2, utilization. So basic answer is growth. Let me tell you, the bank has for 5 years not posted a loss. No intention of posting loss in any quarter, any year, any time now. I can tell you that much. So it's all growth. But the second important reason is that there are some businesses that are also, at a stage where it needs scale up for profitability. And there are 2 such businesses.
Okay. You have a lot of sovereign funds. I mean, if I remember right, you had GIC also as one of your shareholders, and now there's ADIA. Can you tell us about the kind of shareholders you have? And also, what does your foreign holding now go to? When you announced your numbers after March, it was, I think, 25%. What does the foreign ownership now go to?
Okay, I don't have the number offhand of foreign ownership, but I can comment on this. The private equity side of RDA, which is invested in the platinum indexes entity. Now, whom we are allocating this stock. Now, then as well as, like I said, Warburg Pincus, they're really a phenomenal global name. So what this does is actually gives 2 things to us. Let me just tell you that, Lata, these people are really high quality investors. They see everything. They invest only in companies with really good governance, and they can't raise a question on the governance. They are very long-term focused and very, very professional. I've dealt with them for a long time. It's super professional. So what happens is that when you get that kind of capital, then we are at total peace of mind. I can focus on the work. I can focus on building good bank. And then value will get created.
Okay.
I want to just add one thing that, in my opinion, broadly speaking, to create long-term value, you really will need a product that customers love, really important, and, a brand which attracts. IDFC FIRST Bank has become one such brand. It attracts today. And, products are really superior and strong unit economics.
Okay. A final question to you. When Warburg first came in, I think 2012 in Capital First, and by the time they exited, they made, as you said, 9x. What have you promised them now?
Yes. I've promised them lots of things. I told them they'll make lots of money. Okay. So, and I really believe it can be, because let me tell you, Lata, that the first 5 years, a lot of people sometimes say that, look why they are, your OPEX is high or your cost income ratio is high. It is high. I don't deny it is high because of the liability franchise, credit card franchise. But I tell them that phase 1 was setting up the bank, phase 2 is operating leverage, phase 2 is profits, phase 2 is return on equity. And I have indeed suggested to them, let me say, nobody can promise anything, but I have definitely, like in my own way, told them with a lot of confidence that they will make lots of money.
You said 20% CAGR, so should we say you double the bank in 4 years?
Definitely, I think so.
Okay.
I mean,
all right.
think of 20%. And I believe that our profit after tax will outpace this growth. This is my belief. I mean, our numbers are looking like that. This year, by the way, has been a bad year for us because of the microfinance impact on us, and I take responsibility for that. I'm the leader. So think of this year like we had a massive turnaround in our PAT from the bank. We took it off from the loss position to profit. It was supposed to go up. It came down. It happened to us. But we believe from 26 onwards, the next 4 or 5 years, you should expect good numbers from this bank.
Okay. Thank you very much, Mr. Vaidyanathan, for speaking to us. We will look forward to more searching questions and answers after you announce your numbers, your Q4 numbers. Many congratulations yet again for getting some marquee investors in.
Thank you, sir.
Okay. So there you have Vaidyanathan now coming with the more granular details in terms of their capital adequacy, now going to over 18%. Of course, it will be immediately dilutive, and maybe that little bit of red is seen on the stock. But, capital is big raw material for banks. So, you would grab it with both hands when it comes.
Well, and this is an additional factor, for the banking stocks itself, because you have a big name coming in there. They're showing you $1 billion or thereabouts. So it's a positive rub-off. Besides valuations and the likes, and besides what it's doing to that particular bank, which in this case is IDFC FIRST Bank, but someone writing $1 billion check is showing the kind of confidence, which is good.
Absolutely. At a time when things are otherwise wobbly, to detect and say this is a domestic-facing industry in a country which is showing like steady 6 to 7% growth, I think, clearly it's a morale booster for the sector as well.
Okay, all right, absolutely. Thanks for that, Lata. IDFC FIRST Bank making headlines, and the clear takeaways: you're getting 7,500 crores in equity capital, 15% dilution, but the capital adequacy ratio goes up to almost 19%, as Mr. Vaidyanathan mentioned. Well, let's stick with banking. Actually, there's so much of news flow right now. We're discussing, of course,